3, 2, 1. Hey, Matt Davio back with Steve Ribble. Steve is a trader, and he's involved in a business that all traders are always concerned with and should be, and that is the tax business. He runs a website called shrinkmytaxes.com. Steve, thanks for coming on. I appreciate it. You're calling from cold, chilly Florida, where we talked a little bit before coming on air that it's colder there than it is here in Bend, Oregon today.
Which surprises me, Matt. I mean, it's cold here today, cold and windy outside, but you guys are probably 15 degrees warmer out there than we are.
That's crazy. Yeah, no,
that is crazy.
It's 9 a.m. here on the 13th of December, and we're already at 48 degrees, going to about 57 today. So that's pretty wild that you guys are at noon and we're 15 degrees ahead of you. So that's pretty.
It's cold.
So let's talk a little bit about, trading, how you kind of got into the business. You were on the other side, on the retail side, as a institutional sales guy for a long time. So why don't you back us up? You went to DePaul out of Chicago. How did you end up at DePaul? How did you end up at a good Jesuit university like that in Chicago?
Well, it was actually just convenient for me when I went to 2 years worth of college here in Florida and ended up getting into the brokerage business at a regional firm down here. And I did that for about 4 years, and then I moved a couple different places with a few other firms, but I ended up in Chicago with Scudder, and I went back to school there, and DePaul's right downtown. The campus was very convenient for me, so I went back to finish up there at DePaul out of Chicago. So it was more of a convenience factor than anything.
So you got the job with Scudder even before you finished your degree. How'd you manage that one?
I interview well. Yeah, well, I had a lot of experience. You know, I had been an advisor on the retail side for a number of years. I moved from Tampa to Minnesota, which is a story in and of itself. I worked for Principal Financial for a couple years there. Before, it was more of moving away from Minnesota was just the weather. Minnesota's a beautiful state, great people there in Minnesota, but for a Florida boy, it was just way too cold for me. I think the first year that my wife and I were there, it was at one point like 20 below zero. This was back in '96, and they just had a terrible winter. I think it was one of the worst they'd had in many years, and it was just too cold.
Yeah, my wife's from Minnesota and I'm from Detroit, but Minnesota's just painfully cold, and I couldn't live there either. Plus in the summer, the mosquitoes take you away, so you get it twofold. You get that heavy humidity in the summer. So you were selling mutual funds. I'm guessing with the Principal and Scudder. You also spent, and then Scudder. You ended up getting bought by Deutsche Bank and moving out to Seattle. So you've lived all over the place, and you've kind of worked on the sales side of the business. Give us a little background on that, on that lifestyle, because you did it for quite a while. You probably did it for about 15 years before 20 years, maybe before you moved back to Florida.
Yeah, it was definitely a lifestyle. You had to buy into that. So I was outside sales for Deutsche Bank. Started in Seattle, and I covered Oregon, which I love. Great state out there, and covered Washington. I had Idaho, and at one point I had Montana, Wyoming, and Alaska. So it was a huge geographic territory.
Yeah, big geography, not a lot of population though.
Right. So most of my time was spent in Oregon, Washington. Yeah. And to a degree I would hit Idaho every quarter. But you're on the road a lot, and you're traveling a lot, and thankfully this was back before all of the TSA pat downs that are going on right now. I don't know that I could do it, having to get patted down every week.
Especially that you probably could have hit a couple, especially before 9/11, you probably hit two or three cities in a day at times. I was talking about this the other day. You can't travel like that anymore. I used to live down in when I was in the medical device business, and I'd go up and see my reps in Boston, New York, and then end up in New Jersey at night, and see really 3 hospitals in one day. There's no way there's no chance I could do that today. So yeah, the traveling's gotten much more difficult for the salespeople out there. Your days are really spent in lines waiting. It's really hurt business productivity wise. So is that part of the is that part of the reason why you got burnt out? Doing that for so long.
I I kind of had an awakening, if you will, when the territory. When I was out in Seattle, we were there 4 years, and my wife and I both missed the West Coast. And I've talked about that before, Matt. And I'd love one day to be back out there, just because I love to backpack and camp and be outdoors. And obviously, there's not too much of that here in Florida. And in the Northwest, there's just great trails and scenery and stuff like that. But my wife doesn't fly. She's like, if you remember the A-Team and B.A. Baracus and Mr. T and didn't want to fly, and that's really how my wife is getting on a plane. She's just terrified to death. And this was prior to 9/11, and I think 9/11 even made it worse for her.
Right.
So the sales territory opened up back in Tampa, was Florida for Deutsche Bank, and so I was able to transfer and get her back closer to her family, which she really appreciated. But the reasoning I got back into trading and doing the tax stuff full time was just by chance I was having some trouble with my shoulder as back in, this would be probably late 97, and I went in and had some X-rays done on my left shoulder, and in part of the X-rays they found some nodes in my lungs. And so I had to go for more testing and stuff like that, and that just freaked me out. I just at that point, I've got kids. I don't see them all that often because I was traveling all the time, and I didn't. I'm not saying it was life threatening or anything, because it ended up being nothing, but it really made me sit down and evaluate my life at the time and what kind of lifestyle did I want to lead. And I chose to do the tax stuff because it is seasonal to a degree. We're busy from January to April, and then I can trade out of my house the rest of the year, which is really the game plan that I've got, and I'm here for the kids, and that has been such a joy for me, and I know it's been a joy for them too to have me around more and be able to do things with them.
Yeah, it's fascinating. You and I have a similar background in that we were both sales guys. I got my brokerage licenses. I never really did anything with it. First job out of college, I got my 763 and did all that, but I never really went on the road and sold mutual funds like you. I was more, I was working for the Equitable, and they wanted me to sell whole life annuities, and I didn't believe in the product. So after less than a year, I moved on and ended up in the medical device biz. And same thing, after 7, 8, 10 years of traveling and managing reps, my passion was always with the markets, and I started trading probably in the early 90s, and I was making more money. And at that point, I was making $250,000 a year in the sales business. I was making more money trading than I was, getting on the road, like you said. And I was just like, same thing. I'm like, epiphany, boom. Why am I doing this? So,
right.
Talk about that a little bit, that transition, because it's not that easy for some, and to walk away from that guaranteed salary, and then, and at least, if you show up for your sales job, you're going to get paid if you do the work. So, right. Talk about, why is it, that one would want to leave, and some of the skills that you think you need before going out on your own.
The background is a little bit different maybe for a normal person out there who wanted to get into trading full time, because I had experience, with stocks, and then I had been around the mutual fund industry for many, many years. And so and like you, it's a passion. I love the markets. I love getting in there and learning every day, because I think you can learn something new every day. And, but being around the money management side, through Deutsche Bank and Scudder, it's amazing to me how many money managers out there don't employ technical analysis. A lot of them are just fundamental guys, and right. They'll buy a stock and they'll hold a stock, and we can go back and look at examples of companies that have blown up that many managers continue to buy on the way down, right. And it's the pattern is there, and I think I had mentioned before to you that my inkling into technical analysis came through Dorsey Wright. I read his book back in, this was probably 96. I read his book on point and figure charting, and that really kind of got me interested in learning more about technical analysis and that side of it. So I traded for many years using point and figure, and then I kind of broadened it out from there. It was difficult at Deutsche Bank because we had to go through so many hoops to buy or sell stocks. You had to get pre-clearance and all this other jazz. So that really, what that made me have to do is to become more of a swing trader, which was fine for me, because I couldn't constantly monitor these positions. But what I would look for is just swing, setups and things that were going to break out and look to catch a trend on, and try to hold it for the trend, for the ride. And so that's kind of how it evolved in my process. Started out with point and figure and kind of grew from there.
Yeah, point and figure I think is great stuff, and a lot of it's kind of a lost art. I'm a big you can call it a lot of different things. It's basically histogram or the X's and O's, however you want to look at it.
Right.
I'm a big fan of it also. Are you a big fan of DeMark? Do you use DeMark indicators? Countdown and sequential and some of those types of things?
I don't. Yeah, I've kind of evolved it where I try to keep things as simple as possible. I look at I'm a big believer in simplicity, and it's nothing more than looking at volume on stocks. Looking for certain patterns that are setting up, and looking for volume breakouts from those patterns, and then initiating positions off of daily charts, reviewing daily and weekly charts to try to set targets of where I think things can go, and to set stops. Yeah, I'm a big believer in making sure you've got to stop, on those positions. And then, I usually peel some off. If I get the move in my direction, I'll take some profits. I'll move my stops up and then try to let it run, until it hits a target or if it looks like it's getting weak. But that's generally how I operate. I try to keep it no more difficult than that. Just looking at patterns, as they evolve and looking for, setups from those patterns and monitoring the volume that comes into them.
So I love the story of the fundamental, like you said, you were selling the product to the advisors out there on the road, selling the buy and hold, sales pitch, right? Buyer, mutual fund, hold it. Our guys know what they're doing fundamentally, and that may be true, but, unfortunately sometimes I think, I'm in agreement with you. I tend to find the technicals are much more important than the fundamentals, because the technicals always show the fundamentals, let's say 99% of the time. The price is already built into whatever news may be coming. So making that transition, and I think that's wise, what you've suggested. I agree with you, by the way, wholeheartedly. I think if you're going to trade stocks, unless you have seven figures that you're really day trading, you shouldn't really day trade stocks anyways. I mean, stocks and use options to swing trade. Make your trades a little longer. 2 to 6 weeks, somewhere in that time frame. I think it's just day trading stocks right now, for a number of reasons, and I'd like you to address these. Tax-wise is not a great vehicle if you want to day trade. I think, again, futures and Forex and some of these things and commodities are better suited for the day trader than, the stock trader or, the swing trader, and you're going to keep more of your money. So let's talk a little bit about this. You run another business called Shrink My Taxes. And you basically, if you go to shrinkmytaxes.com, you work with people to not only provide the returns, but also, find ways to, stay within the law and do things that benefit your customers. So, talk a little bit about that. You swing trade stocks, but do you also day trade some futures and do those types of things because of the advantages that are accommodated to that trader?
I do. I started getting into futures about 2 years ago, and I've really fallen in love with them. I think they're I don't want to say they're a lot of fun to trade, but they certainly are interesting, and it's a totally different vehicle than stocks. Absolutely. And my advice for anybody that maybe is looking to get into futures is if you are not disciplined enough to take a loss, don't trade futures. That can really wipe you out, because of the leverage involved with the E-minis and the other contracts out there. You've got to be disciplined enough to be able to take a loss on something, on those positions, because they can eat you up pretty quickly. But the tax advantages on the future contracts are greater. You're taxed. The default taxation on those is 60-40 long term and short term. 60% long term and 40% short term on the gains. Yeah.
So explain that to people just so they understand. If I make 100,000 trading stocks and I make 100,000 trading futures, right? I'm trading SPY.
Right.
Let's just use it simple. I'm trading the ETF SPY or I'm trading the ES for futures, and I make $100,000 trading both. What is my tax situation? What do I need to do when I sit down with my tax specialist at the end of the year? When I go through that, walk us through a little bit.
Sure. Well, if you think about it, the default on futures is 60-40, as I said. So really the highest margin on that gain is going to be about 23%. If you blend the tax rates together, it equals out to about 23%. Whereas that $100,000 gain on the ETFs or the stocks is going to be taxed at your highest bracket. It's a short-term gain if you've been day trading.
Right.
So it's going to be taxed at your highest bracket, which right now is 35%.
Right. So I make $100,000 with
so it's a 12% difference. That's a big. Go ahead.
Yeah. If I make, again, I'm doing the same trades. I'm mirroring myself. I make $100,000 with the SPY and I make $100,000 with the ES. I'm going to keep $77,000 with my SPOOT or with my my S&P minis, and I'm going to keep 65 or 12,000 left trading the exact same thing via the SPY. So, and again, this is just my question to you is if I'm trading ETFs, shouldn't I switch over to futures trading then, Steve?
Potentially. I mean, that's going to be more, in my opinion, I think it would be more individual, with what that individual and their circumstances, unless they can be there daily and monitor this stuff daily, ETFs may be the way to go. But if they're from a tax standpoint, yeah. If you're trading, yeah, absolutely. Yeah. If you're day trading ETFs, there's not any reason why you couldn't look over at the S&P contracts or the other contracts out there on the future side, because the tax advantages are significant.
Let me ask you, traders talk about marking to market, the mark to market treatment to qualify as a trader on the tax side of the tax equation. Should futures traders mark to market?
Good question. My answer on that would be it depends on if they're profitable or not. A profitable future trader should not elect mark to market, and an unprofitable future trader probably would benefit from mark to market, and I'll explain what that is here for those of you maybe not familiar with it. But mark to market is an accounting change. You have to make that election with the IRS. And what it enables you to do is it turns these capital gains, capital losses into ordinary gains and ordinary losses. In other words, if I have a significant loss and I'm a regular investor, and I've got money in XYZ ETFs, and I have a $20,000 loss for the year in my trading account, well, I'm limited to being able to deduct only $3,000 from my taxes. Wipes out any gains I have, and then I'm able to deduct $3,000 off my income levels. Whereas if I elected mark to market with that accounting method, then I'm able to take that whole $20,000 loss and count it against any other income source that I have. So if you have a spouse that works full time or whatever, but that $20,000 is going to be able to be deducted in full against any losses or any other income that you have on your tax form. So that's significant.
Yeah. Whereas, and again, when does that filing have to happen for the past year? There's some timelines on that also. For people that are trading and maybe have losses, this is good stuff to know.
Sure. Well, the mark-to-market needs to be filed. You need to make that election before you file your tax form, or it needs to go in actually with your tax form. So it's too late for 2010, but going into next year, they can make it on January 1st, and they would just make the election and fill out just make that election and send it in with their 1040s for 2010 taxes to make it for 2011. Okay. So that gets counted towards next year.
Okay. So again, if you're futures trading profitably, don't mark to market, folks. It's pretty simple. And if you're losing money and you're still not to the profitable piece of your trading, then obviously it's a benefit for you to do that. Has there been any new laws passed in the past year that futures traders need to be aware of when it comes to taxes, or something? I know there's been a lot of talk that they're talking about getting rid of that 60-40 treatment. I know Davio is one of the lead Congress people who wants to get rid of that loophole, if you will, for traders on the futures side. Have you heard anything new? Has anything come out that's going to change for next year, for 2011?
No, I haven't heard anything new. And the only thing that's going on right now, and I haven't seen anything whether they've passed it or not. I don't think they have. I think it's still up for a vote there in the Senate, is the extending the tax cuts. That would affect, if they don't, it would affect, your tax rates and capital gains rates for next year. but that's still in the works. But I haven't heard anything.
Yeah.
I mean, if they end up repealing, and getting rid of that 60-40 split, then, future traders probably should elect mark-to-market at that point, because it's going to help them with wiping out other income sources if they do have losses, but wouldn't be any detriment because everything would be taxed as ordinary income on the gains anyway.
Right. So give us an idea of some of the key things that people should, one thing I love about futures also is I just take in, hey, I take in basically a 1099 from my broker. Here's how much I made and tax me. It's real simple to do my taxes. Versus stocks, I used to come in with stacks like this,
Yeah.
in and out all the time. So I don't need to do that anymore with futures. And that's really primarily the reason why I've gone to maybe 95% futures commodities, because I just come in with a number and I'm taxed at my rate.
Yeah, you get a 1099 that gives you overall, what you made for the year from your futures business, and it's very simple for your CPAs or accountants out there to calculate that stuff. There's really not much that they have to do to plug in the numbers.
So, what are some things that traders should be aware of that they can take advantage of, and also areas that are pitfalls that maybe they make mistakes on when it comes to trader tax questions and issues? Give us some thoughts on the good and the bad there.
Sure. Some of the things to kind of watch out for is making sure if, let's say that you're trading, and you've got your accounts, that you need to be careful that if you are trading for yourself, you're not trading in a joint account. I mean, if you trade a joint account with your spouse, what could end up happening is you could be deemed to have a partnership, a de facto partnership in that situation. And what it would essentially change is that you'd have to file a partnership return, which is an informational return, and it goes into your joint return anyway. So, I mean, that's one thing to be aware of. There's some traders that establish entities to trade out of. The caution there is to make sure you go ahead and change your brokerage accounts to those entities. Don't trade outside of that, because that could cause you some issues with the IRS. If you're trading an individual or a joint account and you have formed an entity for your trading business, that would be an issue. Making sure your accounts are titled properly for your trading business.
In other words, if you created, as you said, an LLC to trade your money through ABC, and that way you can deduct your subscriptions and your rent and those types of things. But make sure that you're setting up that trading account under ABC.
Right. Yeah. Make sure that is all congruent, because you don't want to have any discrepancies there when it comes to the IRS, because they'll look for anything that they can use to deny your trader status. And in essence, what would happen is that you would get taxed. If you'd lose some deductibilities. From a standpoint, your home office, as you mentioned, you're not going to be able to deduct certain things like that, and that's a detriment. So don't make that mistake. The other common thing would be to make sure that you can. One of the misconceptions is if I elect trader status, I'm not allowed to have long-term positions, which is not true. You can have long-term core holdings, mutual funds, things like that. Just keep them segregated. Keep them outside of your trading account. Open a different account, and you could have those longer-term positions in there, mutual funds, things like that.
Right.
Don't keep those positions in with your normal trading business.
And you make $100,000 trading and $10,000 on your long-term stuff, and like you said, there's separate line items. Keep the businesses separate in that regard. One's trading and one is long-term. So pretty straightforward there. Can anybody have tax practitioners that are not located in their own living area? In other words, Steve, you're in Florida. Could traders come to you, even though I don't live in Florida? Could I come to you and have you provide me, service on my taxes?
Yeah, absolutely. I work with people all over the country, so it's very easy. We have a secure portal on the website that we would set them up with, and they can load documents in there that we can retrieve, and then we can work on the taxes and load them back in there for them to retrieve and have copies of, et cetera. So, yeah, there's no restrictions on where somebody is in the country if they want to work with somebody like myself who understands the ins and outs of trader taxation.
What questions do you think anybody should ask when they're sitting down with a professional like yourself? What are the must-haves that you've got to know? When you're interviewing a potential tax professional.
Well, the main thing is to have somebody that understands traders, and I think that's where I can be unique in that situation because I am trading, and I understand the lingo and what people are trying to do from that standpoint. But some of the questions to ask are, I think a predominant one is going to be mark-to-market accounting. I mean, you're going to have most CPAs out there are just not going to be up to speed on a lot of the stuff that traders have to deal with, and that's going to be the primary one is mark-to-market. They're not going to know it. They won't understand it for the most part, and I think that's going to be the big issue there. Yeah. Also, they may not know how certain things are taxed. That could be another area that they're not going to be very familiar with. Deductibility of certain things, when running a trading business, what you can deduct and what you can't deduct. Those are questions that you're gonna want to ask. Yeah.
Again, all important things, and I agree with you, Steve. I think you've got to find a professional who deals with. It doesn't matter what you're in. I mean, if you're a bricklayer, by all means, find somebody who deals with other bricklayers. Get people to recommend always. And that's why I'm interviewing you, Steve, because you do provide a service to traders that I think people should take a look at and find people who work in these spaces. Don't just go out and see somebody with a CPA. They may not know exactly how to handle traders. Ask them if they've dealt with traders. How do you deal with mark to market? Get the questions answered, just as you would with a professional that's going to operate on you and do surgery. Find out these questions. It's important stuff, guys.
Yeah, I mean, you wouldn't go look for futures advice from somebody who's never traded futures before, right. And that's a example that I would give you. It's you want to find somebody who's got experience in that area that you can get the right answers and know Steve, how to handle your situations.
Again, your busy season is coming up here, turn of the calendar, January through really through April, and for those that are late, you have until October. Do you still trade, and when how do you trade, and how is your trading life kind of, how do you adapt that to your style? Because again, I think it's great that you have, other business entities, and I always say to people, it's good to have, other streams of income because trading definitely can have its, it can be inconsistent when you can actually earn income. So how do you deal with that?
Yeah, it's a great question, Matt. I tend to back away from doing futures trades because I can't give it my full attention, and so during the tax season, I'll typically just do swing trades on the stocks, and continue to look at my setups at night and gauge entry points, etc. Monitor positions I might have open, but I do less of the futures business in that time frame just because I'm going to be so busy doing the tax stuff. I just don't have time to constantly monitor setups for ES.
So that's important. Again, it's important to define, how often you can sit and trade. I mean, like Steve said, if you can't be involved on day trading, then don't be a day trader. There's nothing shameful in that. And most people, quite frankly, can't sit there and trade. But also, the way I day trade is 1 to 4 trades if I'm lucky. That's a busy day, but. Lately, right. I haven't even done a trade today. I'm sitting there on my hands all day. We've got a 4.5 point range, and I continue to sit. That's part of the game sometimes. So you can't come in and say, I always tell any aspiring new traders, you can't come in and say, I have X amount of money. I expect to make X dollars a day. It's not that simple, guys. It has to be, you have to come up with a strategy that fits your personality, your lifestyle, and within that, you still have the market. The market basically dictates, if I have a 4.5 point range, I really can't trade a lot. It's just the way I trade.
Yeah, I would agree with you there. I don't know who said it, but I remember somebody had once said that it's better to be, out of the market wishing you were in than in the market wishing you were out. And always take that to heart. I don't need to trade every day. That's the main thing. Is I look for the right setups, whether it's on the ES or individual stocks. And if they happen, they happen. If they don't, they don't. And that's kind of how I've tried to take the emotion out of my trading is just monitor the setups. And I don't press myself to trade every day. Sometimes it's not there, and I won't do any trades, and that's okay with me because the market opens up tomorrow, and there's a new opportunity tomorrow. So I don't try to press things because I think that's where you can get yourself in trouble.
I agree, Steve. It's better to do nothing sometimes than to flip a coin and guess. And I find a lot of people. I think especially a lot of us males have the egos that we need to do something. We've been sitting here all day. We've got to got to make our money in the day. And the reality is you don't have to trade. And, sometimes one or two good trades a week will pay for your entire month. So, be patient, wait for those right setups, whether you're trading stocks, whether you're trading futures, whether you're trading options. You don't have to be, and don't try to compete with these, computer guys, these HFT guys, the high frequency. You're not in that space. If you don't have, physicists and mathematicians working for you, forget about it. It's not your space, so don't worry about this hyperactive trading. It's a fool's game, I really believe. So Steve, any other advice you want to give to people? Like you said, tax changes. Who knows what's going to happen? This stuff hasn't been voted through. We're coming to the end of the year. Will it be decided or not? How do you deal with those types of issues? You got to be thinking about them, but how do you deal with them when we don't really know one way or another?
Well, from that standpoint, I agree with you 100%. We don't know what's going to happen. I mean, we do know they've got to do something, and from the standpoint of just the deficits that they're continuing to run up on a monthly basis, they're going to have to do something to raise revenue, or they got to start cutting benefits, cutting services, and stuff like this. So they got to pay for it. So eventually, that's going to happen. And my thought is that tax rates are probably going to go higher.
Yeah.
Maybe for certain segments, maybe for certain people. I mean, I think one of the things they're talking about is getting rid of deductibility of home mortgage interest for high-income earners. I mean, there's a lot of things that they're trying to throw out there, and who knows what's going to get through. But the main thing is do what you can to cut your taxes. And I forget who said it, but somebody had once said that I don't mind paying taxes. I'm happy to do it, but I'd be just as happy at half the price. And that means just because you have to pay taxes doesn't mean you have to pay retail. You don't have to pay the full amount, and that's why the tax code is there. I mean, you can look for ways that you can legally use it to your advantage to reduce your tax burden. And so that's what we try to do at Shrink My Taxes, and that's really why I started Shrink My Taxes. I found so many people that were coming in when we would offer advice on cutting their taxes that were working with CPAs that just would do their taxes. And we found that anybody can sit there and take the numbers that you give them and plug them into your tax form, and here's what you owe or here's what you're getting back. Right. But they don't really offer any advice, and that was a shame. And that to me was doing a disservice. And so Shrink My Taxes was really founded on the belief that you can proactively reduce your tax bills. Right. And so that's why we started, and that's really our mission, to help people, cut their taxes.
Well, Steve, I like it. You can find, again, Steve on Twitter. You can find him at Shrink My Taxes. You can find him online at www.shrinkmytaxes. He's on Facebook if you want to like him there at Shrink My Taxes. So just do a search, whatever social media. While we're on that subject of social media, has that been a help to your business? And again, talking to other traders and talking to people who are considering this as maybe a sideline to their income. I'm sure. Talk a little bit about social media, how it works for you.
Sure. I'm getting more into the social media. I had used it predominantly just to meet other traders and just kind of talk shop, if you will, on the trading side. I really hadn't used it for Shrink My Taxes, and so that's been relatively recent for me, where I've been actively out there trying to promote more and do more on social media. Yep. But StockTwits and Twitter have been just terrific as a way to find people that fit your style, what kind of a trader you want to be. You can find them out there and then follow them and kind of tune out the other noise. I mean, I think that's, something we didn't talk about, Matt, but the other thing I try to do is to tune the noise out. I don't have CNBC running. I don't have these other things running in my office because it's nothing but noise. It doesn't matter to me what somebody or some talking head happens to say on TV. It doesn't matter. It's my charts and my setups that make the most difference to me. And I think you said it before, but 1 to 4 trades might be a busy day for you, and that's what I love about your style, Matt. And I've been following you for probably at least a year now. I've been trading with you for a while, and that's one of the things that drew me to you, is that you don't, you're not in and out, and that's just not. And there's some people that are wired that way and can do that, and that's just not me. That's not who I want to be as a trader. I'd rather be patient, wait for my setups, and if that means not trading, it means not trading. That's okay. I'm willing to accept that because that's the type of trader that I want to be.
Yeah, I think everybody goes through their ways to get comfortable, but for me, there may have been a time when I was younger and more egocentric. You obviously have to have some ego to step in and take a risk. This game is all about risk, but I think less is always more in any business, and you got to focus on what you're good at and find what that is. Listen, there's a million ways to make money in this business, and there are people that can have high frequency trade. I just can't, because I don't want to lose 300 times a day and win 350. It's just too much for I can't handle that much noise. That becomes noise to me. And just as CNBC, I cut off my CNBC back in 2003. I don't have a Bloomberg anymore. I used to have CQG, Bloomberg. I used to have all these tools. And, I've got the screens, but you know what? I really look at two big ones, and everything else is just kind of a cursory glance. So you don't need all this fancy equipment. You don't need all this noise, as Steve said. Keep it simple, guys. I mean, it's really, less is more when it comes in this business. And quite frankly, your broker wants you he wants you to trade, but he doesn't want you to trade yourself out of business. So find a broker that works with you and find some mentors that work for you and learn how to do that, because you don't need high frequency trading to make it in this business. That is absolutely a misnomer, and I'll go to my grave saying that.
Yeah, I mean, I think you say that all the time on the Twitter stream, less was more, and I agree with you wholeheartedly there. I don't think you need to, be trading, 30 trades or 40 trades a day. That's just crazy to me. Although some people are, like I said, some people can do it, but that's just not me, and it's too stressful for me.
It's exactly what it is.
Way too stressful. And I think along the lines of what you also said, you want to find mentors out there. You want to find people who are willing to teach, not just give you setups, or not just say, here's what we're buying, here's what we're selling. Because if you don't understand why behind that, it can be to your detriment as well. So you got to find the people out there like yourself, and there's others on Twitter as well that are very generous with their time and can teach you how their methodology works, and that's what you want out there. That's the guys that you should follow and listen to.
Well, thanks, Steve. I appreciate you taking the time, and Shrink My Taxes. Again, guys, find them out there. If you have questions, this is the type of person I would want to ask if I was new to the business. Get educated. Don't be afraid. Call Steve. You can call him toll free. He's got 877-62-NO-TAX. Online, shrinkmytaxes.com. Seek out the information, folks, that's out there. Get your answers before you get hot and heavy in this. Set it up right. Do a business. If you're going to run this as a business, there's ways to do it the right way. And definitely talk to these people. As Steve said, we brought up a couple ways that can get you into some headaches. Not that you can't get out of them, but set it up the right way. That way you're just... It should be a smoothly run business, as any business. You would do the same thing if you were starting to make scooters tomorrow. So why not do it with your tax business?
Yeah, do it with your trading business. Absolutely. You got to run it as a business. Take it serious.
Exactly. All right. Thanks, Steve. Appreciate your time and continued success down in Tampa. And I know the warm weather will be coming because the bowl games are coming January 1st.
Yeah, we do.
So who do you like in the big game? Auburn, Oregon. Who's your winning team in that one?
It's got to be Oregon, and I'm not saying that because you're out there. It's Oregon. I like to root for Oregon. That's the first time I saw them play this year. I forget, was it Arizona State or something, that game, and the speed on that Oregon team is just amazing.
It's amazing. So, I'm looking forward to it. I tend to think I think my brain tells me Auburn will win. And I don't have a horse too.
I think Auburn will probably win, but I'm rooting for Oregon.
Okay, I'm a Michigan guy, so like I said, I'm just looking for a fun game to watch myself. So it'll be a good one.
Thanks, Matt.
Thanks, Steve.